Hell yeah, I'll fix your man bun.
Why'd you get up and walk away?
All right, well, we're going to go ahead and get started, guys. I'm going to mute everybody.
How about the rotisserie your
Bye. All right. So thanks, everyone, for jumping on. We have about, okay, Rashad, IMO. Can you guys hear me? Put a 1 in the chat if you can hear me. Perfect. For life. All right. So I just wanted to take a couple minutes to, well, one, if you guys don't know me, my name is Heather Lopez, one of the founders of Blue Capital. And I just wanted to take a couple moments to introduce our newest educator. And I know a lot of you guys have been wondering who's our educator. I see that a couple guesses have been made. So I'm going to go ahead and bring this person on. Get him on. All right, guys.
What's up, guys?
Yay!
So I'm Suneel, and basically I'm gonna give you guys a little background on myself. So I actually started dabbling in trading about 4 to 5 years ago. Started out in stocks, like anyone else, just messing around in Robinhood. I got really into crypto a few years ago, and I was actually mining Ethereum back when it was pretty much brand new. Actually ended up investing around $10,000 into it when it was around $10. So that was my first big investment. I ended up hitting it big. And ever since then, actually just got into Forex about, I want to say a little bit over a year ago. And I've seen my share of success. So I'm going to go ahead and just teach you guys a few of the things I've learned and that have helped me throughout my journey in trading. So I'm going to go ahead and share my screen and get started. All right, so basically, everyone see my chart? Give me a 1 if you can see the chart. Awesome, awesome. All right, so I'm gonna walk you guys through my process basically when I'm charting, and then we're gonna go over a few things. So the first thing I like to do is I go on the 1 month chart. If you know me, the Euro USD is my favorite pair. I trade Euro a lot. So what I like to do is I want to map out my key levels on the monthly first of all. And the way I do this is I'm not really too worried about where price was back here. I'm more worried about like what's relevant to me at the given moment. So if I'm looking at it, I want to use nice round whole numbers. So I'll put my first area right here at 1.24, and you guys can basically just copy down these key areas if you want to just know my thought process on the euro. So as far as my key levels go for my monthlies, I'm going to have them all on the right as far as my text alignment. And for my resistances, I'm going to keep it on the top. For my supports, I'm going to keep it on the bottom. So the first level will be my monthly resistance at 1.24. Ooh, where'd that come from? Awesome. I'm a little bit OD with my charts, and you guys will see more about like why I'm so OD about it like as I get through this. So 1.24, make sure it lines up over here. All right, awesome. First level marked. My second level is going to be down here at 1.145. And that's going to be my monthly support. And I'm going to put that on the bottom since it's a support. Okay, awesome. All right, now that I have that done, I'm only going to use these two levels right now just because that's where price is. That's where price has been ranging. And basically how I have these mapped out is they're 950 pips apart. So if you wanted to go ahead and map out a couple more, just put one 950 pips above 1.24, one 950 pips below 1.145. All right, so once I do that, I move down to my weekly chart. And the way I'm going to get my weekly level is I'm going to take my fib tool, and all I'm going to do is I'm going to go up to my monthly level, I want to make sure it's lined up perfectly. Come down to my monthly, my second monthly. And wherever that pivot is right there at the 50%, that's where my weekly level is going to be. So I want to right at the 50% retracement. Get that marked. I can go ahead and delete that. And I also want this to be a nice round whole number. So we'll do 1.1775. Just keep that nice and round. And that'll actually be a resistance zone for us right now. So I'll jot that down as a weekly resistance level. Put it on the top. And for my weeklies, I'm going to have them over on the left, just so it's clear to me that this side, I have my monthlies. Over here, I have my weeklies. Next thing I'm going to do is I'm going to take a thin strip, a rectangular box. I'm going to go back to my monthly. And I'm going to run it through just these areas. And this is more so just for me to be able to like differentiate off the top of my head without having to look. Make sure they're nice and lined up. Just run it straight through. Okay, awesome. I'm gonna go into my settings, make sure that there's only that whole entire rectangle is only a 30 pip range. So what I'll do here is, ooh, I actually have this monthly support wrong. So it's important that you go back and double check. It should be 145. Awesome. So my monthly, so I'll go back and fix the weekly in a second. Just move that up. Go on my settings. 1465 on top, and then 1.1435 on the bottom. Awesome. Nice little thin strip. Go on my monthly, go on my 1.24. I'm going to do the exact same thing. 12415, and then 12385. Boom. Nice and easy. All right, so let's go back to the weekly. Let's fix that key level right here. Take our fib tool, go to that top, bottom. All right, and I see that we should be at 1925. You want to keep these nice round whole numbers for your weekly and your monthly levels. Perfect. All right. Now that we have that situated, I want to get you guys to have your charts the way I do. Just some things I like to use that help me with Confluence. So I have a template set up over here, and I'll run through all the different things on it. Okay, perfect. All right, I'm going to go ahead and fix this. So the indicators I actually like to use, I have them on my favorites. So I have 3 moving averages, which are my Vegas waves. I'll go through those in a second. And if you guys were ever wondering what those lines were on my chart, it's actually this RS Dulcin Bollinger hybrid. It's a hybrid between the Dulcin channel and Bollinger bands, if you guys are familiar with either of those. So the first thing I like to do is I'll go on my Dulcin bands, and basically what I want to do is I want to make the plot background white. And I want to make all these lines black just so I can see everything nice and clear. All right, nice and perfect. So as far as my EMAs go, I have the golden one. It's a 144 EMA. This blue line is a 169. And then the red one is a 233. All right, so now that we're set up, what I'm going to go ahead and do is I'm actually going to add a couple more moving averages. I'm going to add one moving average exponential. Once we get this all set up, you guys will see why I like certain things and how I use them. Everything has a purpose, not just sitting there for no reason. So as far as my moving average goes, I'm going to keep it at 8. I want to have my Vegas waves a bit thicker, so when you go on style, you want to keep the regular moving averages thin, the lowest setting. Keep that one, let's say, purple, since we already have blue up there. Awesome. Then we're going to add one more, which is going to be a simple moving average. So you just type in moving average in your indicators. Boom. And you're going to go ahead and change this one to an 18. Let's make that one this red over here. Nice. All right. So that's basically how my charts are set up. I use a few oscillators over here. So the oscillators I'm using, my favorites are this CM Ultimate RSI multi-time frame, because it gives me an overall picture based on every single time frame rather than just a couple of them. I like this bull trading Elliott wave oscillator. And then I also use this CCI coded OBV. Make sure you guys are using the ones by these creators over here. And basically what I'm looking for over here is I just use these for divergences. I don't trade based off of them, but when I'm looking for reversals, I do use them just to see if I'm getting a divergence as well. Okay, so now that we're set up, I have my key levels. I have my monthly, and my weekly. So what I'll do in this situation is I like to come down to the daily time frame, and I like to see, okay, where have we been? What areas are most relevant to me? So once I'm on this daily chart, I'll start mapping out supports and resistances, basically using this horizontal array right here. And if I look at everything, I can see, okay, this area has been very relevant to me in the past because I have a touch here, a touch there, and now it's treating it as it's kind of just hovering around this area right now. So based off of where I'm at, this is obviously a very key area for me to watch. Because if we can get a break and close above that, we can look to be bullish. As of now, we are not. All right, so I'm gonna do the same thing on the 4-hour. And I like to use this horizontal array just because it allows me to differentiate between these key levels and my supports and resistances. Also on the horizontal array, what I like to do is I like to keep it on the thickest setting we have, just so that it's more clear to me. And once I move down to this level, I see, okay, well, on the daily, this was a pretty important level, but once I come down to the 4-hour, I'm seeing, well, could this not be an area of support or an area of resistance now? I've had all these touches over here. And since I already have my monthly support down here, I feel like this is more so likely the area that we need to break to be bullish. So I would move that over here. This looks a lot more relevant to me on the shorter time frame. Let's see if we have any other areas we can map out. No, perfect. All right, so now that I have all this stuff mapped out, I have my supports, my resistances, I have my key levels. What I'm gonna look to do now is just analyze where we are. So I can start looking for trend lines, stuff that goes all into that. So if I'm looking at this, I wanna see where we are in structure. And before I go any further on that, I just wanna teach you guys about how I look at structure. So let's go on a blank chart, let's go on AED. I have a lot of technicals here. Let me just go ahead and erase everything. Remove all drawing tools. All right, perfect. All right, so when I'm looking at structure, I like to think about it in terms of Elliott wave. And the way I look at everything is that the market moves in 3 directions. We're either in an uptrend, which looks something like this. We're trending up. We're in a downtrend, the exact opposite. something like that. Or we're moving sideways where we're just consolidating. But I mainly just want to cover uptrends and downtrends real quick. So in terms of Elliott wave, when I'm looking at an uptrend, most of the time, guys, you will miss this first wave, but that's not a big deal because if you can identify this first wave, wave 3. So let me go ahead and type this out. In theory, wave 3 is often the longest. And never the shortest. Okay. For wave 5, you can expect a 1-to-1 extension of your wave 1. So whether we're in a downtrend or uptrend, these principles stay the same. And what this basically means is you can expect wave 1 and wave 5 to be about similar in length, and you can expect wave 3 to be the longest wave. So in terms of actually trading this, what I'm looking for is, okay, we got this push up. After this peak, when I'm expecting us to retrace, I'm expecting that we'll end up anywhere between this 50% and 61.8% retracement, just because based on theory, this area for a wave 1 retracement has about a 73% chance of holding. Okay? And based on that, I'm going to get my target for my extension by taking this bottom, this top. Let's say we go to the 61.8. I'll be looking at a 161.8% retracement for our extension for this wave. All right, perfect. So now that I have these two mapped out, I'll be seeing, okay, well, now I have a wave 3 that's extended all the way up here. So what am I looking for on my wave 4? On a wave 4 retracement, what I'm typically looking for is anywhere between the 30% over here. So most people don't have this 30% retracement. And the reason why I have it instead of my 23.6 is because in theory, for a wave 4 retracement, I have a 60% chance of ending up between the 30% and the 50%. So that point, that 23.6% retracement is pretty irrelevant to me because even if I miss that, I understand that it only happens 6% of the time. So I'm not really too concerned with that. Awesome. And the way I get my target is I'm just looking at a 1-to-1 extension of my wave 1. So however long my wave 1 is, if I take, or actually that's unnecessary, so we can just use this algo target up here. Perfect. Hit it to the T. All right. So now I have this move up, basically. I'm going to extend it a little bit just so it's a little bit more clear. All right. Now that I've had this uptrending move, what am I looking for? The market has to correct at some point. So I look for, at this point, I've been in a long, I'm looking for shorting opportunities. And the way I get that shorting opportunity is when we actually break through that peak of the wave 3, because at that point we have broken structure. And as far as my targets go, so I won't be looking to short at the top, because looking to short at the top is how you get caught up in being in a trade that you shouldn't be in yet. And that's where we lose money. So I'll be looking for a break of that structure right here. I'll be looking for this retest and a continuation down. That's how I would trade that. As far as targets go, I'll be looking at, depending on where we are on a higher degree, That stuff we'll probably cover in a later class. But I'll be looking to retrace anywhere between that 50 and that 61.8. And that's basically how I would trade the downtrend or the counter trend. So based on this, we have to realize that, okay, this move right here was an internal retracement of this first impulse up. This move right here, this wave 3, was an external retracement to both this move and this move. Then we get an internal retracement after that wave 3, and we get an external retracement. We have to realize that this whole entire move down is still internal to this one big move. So like when you're trading it, just because we're going down does not mean that we are in a bearish market now. This whole entire move up is still considered one wave. This move down is just a corrective structure. When we're trading, we have to remember this is the biggest rule in Elliott wave theory. We trend in 5s, we correct in 3s. So it's a 5-wave structure going up, 3-wave structure going down. So we just covered the uptrend. Let's see what it looks like on a downtrend. I'm not going to get into all the specifics of a downtrend like we did as far as fib retracements go, because it's the same exact numbers as an uptrend. So it'll look something like this, where we're going down. We have that first wave. Our third wave is our longest. Come back up, and then we get that final push. So same exact principle. When I'm trying to counter trend trade this, I'll be waiting for that break in structure where we have a push up, come back and retest that support, and then we push on upwards. So same exact principle. So I just wanted to touch base on that so you guys understand market structure a bit better before we start actually applying it to the charts. All right, so let's go back to Euro. All right, awesome. So what I'm looking at here is we have a possible impulse wave up. Okay, and the way I traded this, so I'm just gonna go through a few trades I've actually taken on the Euro. I had this trend line that was down here. Awesome. And then I also identified a inner trend line. So this is my outer trend line of my bigger trend. I identified this inner trend line we had going on over here. And what I want to do is, so when we're looking at this, we're just looking at the overall trend, okay? So I have these two EMAs over here. And when we crossed over here, we understood that we were bullish, we were riding this wave. We broke down a bit, found support at this trend line, and continued our way up. So let's say we started trading this when we were over here. Let's start identifying these touches over here on these trend lines. My first touch here, my second touch here, and I have a third touch here. I basically caught this big move up, and I took that trade based off of the fact that we were in an uptrending market. I took my fib, so I took a retracement from up here, and I saw we were at the 61.8, which matched up with my trend line. And then we got that push up, which was a perfect extension to these algo targets up here. Negative 27 hit, negative 61.8 hit. Easy trade. So when I was looking to actually short this, I started shorting up here just because I was seeing these wicks. okay? And when I can identify an area like this, where I'm just getting wicks into it and we're rejecting every time we hit it, I need to understand that that's an area of supply. So every time price is coming up here, there's no buyers left in the market. So whenever you see something like this, you always want to like mark that area off. If we end up breaking above it and closing above it, you can like expect the area to start acting as support. But in this scenario right here, it was a big area of supply. We had no buyers in the market, and it was basically just indicating to us that we are going to get some downward pressure. So I shorted up here, but the thing is, you shouldn't have, just for confirmation, how we should have entered this short was, okay, we get a break of the trend line here. And what we also see is, along with that break of the trend line, we're getting a cross on these moving averages right here. So just that break, cross on the moving averages, 2 confirmations. This area of supply up here, 3rd confirmation that price is struggling. Easy short. When we broke this trend line right here, it was a similar scenario where we broke it, came down, retest, and we continued down. And if you look at it, like I use these Vegas waves down here, which is my 144, 169, 233, because I know this area right here is going to be a hard support. So if I break this tunnel that's created by the 144 and 169, I can always expect this 233 to be my area where I come back and retest. Did it perfectly, continue down. Now we're looking at the same exact thing over here. Along with that, what you guys can do as well is you can look for reversal patterns. So in terms of candlesticks, what I like to look for is I look for dojis. There's 4 different kinds of dojis I want you guys to write down. We'll hop on Google real quick just so I can show you some of these different candlesticks. All right, so the first one we'll cover is a long leg doji. So a long leg doji is basically a candle that has 2 giant wicks on either end and you have a small body in between. So let's go ahead and like try to find one on the chart actually. Probably better to go on hourly. Actually, no, there's one on the 4-hour right there. So something similar to this, but you want to look for it at the end of an uptrend. Let's see if we can find one on the hourly. And what do you see right here? That's what I would consider a long leg doji. We have this giant wick on both sides, and we have this body in between that's saying indecision. You have another one right there, indecision. So these dojis can be bullish or bearish, depending on whether they're at the end of an uptrend or at the end of a downtrend. That's the first doji candlestick. Let's go on dragonfly dojis. My caps lock. All right, so Dragonfly Doji and Gravestone Doji was actually the next one I was going to go over, but basically it's a candle with a long body or a long wick and almost no body at the top. That's my Dragonfly Doji. And that's indicating you want to look for this at the end of a downtrend. And what this basically indicates is that, okay, we have a possible reversal on our hands. Whereas the opposite is a Gravestone Doji, where you want to see this at the end of an uptrend and is signifying a reversal that's possible. Next candle. Don't really need to go over spinning tops. All right, so now let's look at tweezer tops and tweezer bottoms. This is pretty easy to find, guys. Basically what we're looking for is, if we're on a downtrend, you want to look for a tweezer bottom combo. And that's similar to what we got over here. It's actually a lot of candles. Let's try to find a cleaner one, a 4-hour chart possibly. All right, so this is what I would consider a tweezer top right here, where we have candles. We have candle bodies that are closing above a support or resistance level, this supply zone right here. And we have these two wicks that are about equal in length. One can be a slightly longer, slightly shorter, but you want to make sure they're about equal in length. And that's a tweezer top pair right there, looking at a possible reversal. And then let's go back and try to find an example of a tweezer bottom. All right, so right here. This is an example of a tweezer bottom right here, where we have a correction. Then down here, what we see is we have these two wicks signifying that this is an area of support. And what do we see after? Uptrend. Awesome. Next candles. All right, so the next few things I want to go over are morning star reversals and evening star reversals. All right, so when you're looking for a morning star reversal, basically you have a bearish candle that closes. You get some kind of doji right after. It doesn't matter whether it's bearish or bullish, and then you get a bullish candle right after. That's at least 50% the size of that previous bearish candle. So let's go ahead and try to find one of these on the charts. And you only see these at the end of a downtrend or at the end of a downtrend for a morning star. An evening star formation you will see at the end of an uptrend.
Sorry to interrupt. I think one of our guys had a question for you in the comments here.
All right, awesome. Half the size of the whole candle or just the body? Okay, so once I find an example, I'll go over it in more depth. I'm actually going to go on to a different pair just to show you guys an example of this. I think GJ would be good for this because I remember a recent example we actually had. Okay, so right here. Typically this isn't the best example, but this is basically the concept we're looking for. So we have a bearish candle coming down, and you want to see this almost doji-like candle, small body, long wicks, form right after it. And we get this bullish engulfing candle right after. So as long as this bullish engulfing candle is at least 50% or greater of this previous bearish candle, it qualifies as a Morningstar reversal. What are all the indicators, please, and settings when you get a chance? Yeah, I'll go over it in a second. So let's go through these candle reversal pattern first, and then we'll go through that. And then the exact opposite is an evening star reversal. And let's see if we can find an example of that. It's pretty much the exact opposite where just show you guys. So what you're looking at is a bullish candle, a gap up, and you want to get a doji right after it. Same thing, followed with a bearish candle that's at least 50% the size of that previous bullish candle. So I don't want to take all day just finding examples of this for you guys, but it's good to just jot these down. All right, so as far as indicators go, I have my Vegas waves, which are EMAs. These are all EMAs. So it's the 144, the 169, and the 233. Then I have my regular 8 EMA and then a standard moving average, which is an 18. For my Dolchin Bollinger Bands, my settings are standard. Only thing I do is I make the plots background white, and I make the plots black, just so I can see the lines. All right. So now, let's say we were trading this break, right? So I have confirmation here. I see that this is an area of supply. I have this trend line that broke over here. And I have a cross of my EMAs, of my moving averages. So as another, basically just another confluence when I'm trading this, what I can look for is divergences. And basically what I'm looking for is, okay, well, price is continuing to move up. I have one touch. This was price over here. Price moved up slightly, and price moved up again. So what I'll do is I'll go on these indicators, and what I'll look for is just divergences. So obviously over here, what I can see is price was slowing down, and what basically gave it away was, okay, price was high. If I look over here, I have a divergence on this oscillator from here to here, which was telling me that price is slowing down. If I'm on my RSI, I see the same thing. We're topping up, we're getting a divergence. Pretty clear. Price was struggling to move forward. If I'm looking at my OBV, I see that it's extremely high and we're due for a correction soon. So as far as my indicators go, I don't really use them for trading. I just use them for actual confluence to see if my setups are matching up with them. So when I was over here, I saw we were in a supply zone. We got that break of the trend line, came back, retested it, broke down. Where do we find support? So we see this wick over here. So in real time, what actually ended up happening was this area did act as an area of support. We broke back up, but then following it, we actually ended up breaking through. We got a retest and a nice continuation. We broke the Vegas waves, came back up, got a nice continuation. So as far as entering a long position goes, I just want to think about this in terms of structure. And as far as the Euro USD goes, yes, it has been bearish. We caught this move last week, going into this week. But the thing is, I need to realize that this whole entire move down is still internal to this move up we had. If I put that up at the top of my supply area, what do I see? As far as a wave one retracement goes, I still haven't broken through the 78.6. So this whole entire move could just be a move setting up for the euro to go higher. Whereas if I break much lower, I'll be thinking of it as this being an ABC internal to this move, and we'll be getting a continuation down to the 1.09 area, which would be my next weekly support actually. I'm gonna look at a few of the comments real quick. Okay, awesome. So we've covered basically market structure. We've covered some of the indicators I use. We've covered my chart setup. We've covered candlesticks. All right, awesome. So now, as a trader, what I want to do is, if I'm looking at this, I want to start just seeing if all these moves actually do match up to like where we counted market structures. So I'll remove some of these drawing tools. Don't want to remove my key levels, so I'm going to do it manually. Awesome. So this is basically how I try to see where we are in structure currently. And if I go back to this impulsive move that we had upwards, it's pretty clear that, okay, this all looks like one move up to me personally. And if I'm considering this wave my wave one, what I want to see is us hit at least that 50% retracement area, which we didn't, which actually had me lost on structure on the euro for a while. But in terms of not hitting that 50, what I want to look for now is, okay, since we didn't hit that 50% retracement on my wave 1, is it possible that I had a 1, 2, 3, and now on my wave 4, I get some sort of diagonal in here, whereas I could reverse and see this whole entire, for the whole entire structure, us hit this 61.8 now, which did happen. So I'm a bit lost currently as far as where euro is, which is why I haven't been trading this that much this week. I think if anyone in the chat knows, I think I took 3 or 4 trades. They were day trades, they weren't swings. Whereas last week I swung this whole entire move. So let's go on a pair that's been moving a much cleaner, just so that we can actually count structure and see where we are. Let's go on USD CAD. This was a pretty easy move for me to map out. I'm going to go ahead and remove all my drawing tools and my indicators because I'm only interested in structure here. Okay, so if I go on a 3-day chart, it's pretty clear to me here that, okay, I don't know what happened here, but as far as this move goes, I can count a clear 5 waves up. And if I look at it, if I'm considering this the start of my 1, I do hit my retracement targets between the 50 and the 78.6. So that looks like a clear 1 wave to me. Retrace down here. Get my 3 right here, my 4, then we get our extension for a 5th. I'm going to remove the wave just so I can go through some of these retracements with you guys. Okay, so now for this wave 3 retracement, what I'll be looking for is us to come down to that 30, missed it by a couple of ticks. Okay, but we hit that wave 5 extension. Awesome. So now long term on USD CAD, what I'm thinking is, okay, so either I have a wave 5 in already, or I have some sort of diagonal in over here where this is an A, B, C, and we're going up for the wave 5 now. But I'm more so leaning towards this count that I already have painted, solely based off of the way we've moved. So what I'm looking at long-term on USD CAD is us to get a retrace to at least that 50. And what do we know? Okay, we have that 50. So if I'm considering this an ABC, what can I expect next? And the simple thing is, okay, right here, I have a 5-wave structure moving up. But now I have something funky in here where my waves aren't extending properly. So I have a diagonal, which plays out something like this. I have a 1 here, 2 here, 3 here, 4 here, 5 here. Based on that, I can expect a correction anywhere down here to at least that 50. And now if I break it down further, I know that markets trend in 5s, they correct in 3s. And what do I see? We're actually in our last move down. Within these moves over here, what I need to also think about is, yes, I do have a three-wave structure going down, but since we're trending in fives and correcting in threes, I can expect 5 subdivisions within this wave 1. So in this A wave, I'll have a 5-wave structure going down. In this B wave, I'll have a 3-wave structure going up. And in this C wave, I'll have a 5-wave structure going down. Let's see if we've met the criteria for that. Have a 1 there, a 2 here, a 3, 4, 5. So I've met my requirements for my A wave. As far as my B goes, I want to see a 3-wave move up. So I can't see it that clearly on this daily time frame, so I'll come down to a 4-hour chart and see if I can see it. And what do I see right here? I see that we did get that push up or push down from here. So I believe this does qualify as an ABC. Got my push up, my push down, continuation up. Now we're at the back end of this correction, and what I'm actually leaning towards and why I'm actually slightly bullish on the euro right now is the fact that I'm not positive that this 5-wave correction is in. It's possible because if I take retracement targets, we hit our 65 or 61.8. So this qualifies as a 1-wave. Have my retrace. That could be my 3 right here, my 4, my 5. But I feel like it's a lot cleaner to look at it as a 1 over here, my 2, my 3, a 4, and I feel like we're going to end up in some sort of diagonal. And that can happen even if we do push up a little bit further. But at the same time, I wouldn't be surprised if we just continue to push up, because there is a possibility that I have 5 waves in, which is another reason why I've been trading. I haven't been trading as heavily this week. So basically the point I wanted to make with this, guys, is that in trading, we can never really blame the market for doing something that we didn't expect it to do. Because at the end of the day, we need to realize that there's always 2 different counts. There's always a bullish bias, there's always a bearish bias. You need to realize when you lose a trade, there's someone else out there that won the same trade. And once we understand that, we know that the market doesn't care for our emotions, doesn't care about what we think. It literally does not care about any of that stuff. And it's either that we're right or we're wrong. So during weeks like this where I was unsure, I knew there was a lot of news, it's NFP week, I like to typically just take a step back and see what the market does. I still took about 3 or 4 trades this week. I think I won every single trade I took this week, but I was very selective. Whereas last week, I think I swung 4 or 5 different trades for over 200 pips each. So it's okay, just be selective in your trades. You want to trade smart, you don't want to trade often if setups aren't there. And you just want to like learn from everything. You want to make sure that you're taking high probability setups. Like if you're telling me that any trader right now knows what this is going to do 100%, like you're lying to yourself, because the euro's at a situation where this could just be a retracement of this whole entire move. Where we're hitting that 50 and we're going to continue up, or we're going to keep coming down to this 108 level, maybe this 111 level first. So there's never really a way to look at it, because if we count, this is an easy 5-wave structure to count right here. Have a 1, 2, 3, 4, 5. Do I know if my ABC is in yet? Me personally, I don't believe it is, because we have not hit this area yet. So as far as a long-term target for euro, I still am leaning towards the 61.8 area at 111.9. And the reason why I'm looking at that is because if I just extrapolate some data, I have a clean 1, 2, 3, 4, 5 going up. I can count 5 waves going down. I have a possible ABC right here. And I can look at that continuation down anywhere into these levels. And it's a pretty easy count to make, guys. Like if I look at it like this, okay, 1, 2 right here. I have a 3, a 4, a 5, clean ABC going up right here. So short term, I do think we need a pullback because this is still a wave 1 of my 5 going down, possibly. Because this is very choppy, and like I don't like counting these choppy waves because you never know with them. When I'm seeing all these waves up here, like yes, this could have just been my wave 1 impulse going down. And I came back into my 61.8 to 78.6, but you never know. So I feel like it's better to let this first wave play out than to just try to trade this whole entire thing down. Because if you do, if you get your entry wrong, you might have the direction right, but typically a lot of us are over leveraging our entries. And if we have our entry wrong, you don't want to be facing that big, huge drawdown if you have your targets at the right place. So we want to make sure in trading that we get our entries right to where we get the least amount of drawdown possible. And the reason why I'm not trading the euro right now is because I see, okay, I know that we have a higher chance of going down long term, but I also see that I have this monthly area right here. I'm unsure of whether this is my third wave down or my first wave down. Because if it's a first wave down, I can expect a pullback anywhere between these levels. And I'm actually leaning towards that because if I pull up my Vegas waves, what I see on a shorter time frame, like the 4-hour chart, is that my Vegas waves actually do line up with that level that I'm looking at on the daily. That's where I have a bit of uncertainty in the euro count. And that's why I'm unsure of structure right now. So I'm more so leaning towards letting tomorrow play out with NFP and everything. I can come back, reevaluate this on Monday, see where we are in structure and plan out my trades accordingly. Because once we do get this ABC completed, what I'm basically waiting for is that first push up. Once I get that first push up, what I can expect is us to go anywhere between here to here over the next year, year and a half. If you guys know anything about the way I trade, like, let me see if I can pull up my euro odd chart. Where is it? Right here. This is actually a trade I've been in since, because I identified structure early on. I got into this trade at this 50% level over here in May, and I'm still holding it. And just based off holding it, the last time I checked up on this trade, I was 874 pips up. Right now, I'm up about 989 pips, still holding for this target. That long-term target at 1.66. So once you learn how to extrapolate data like this, you can play these big swings like over here, where I understood where I am in structure. In trading, you don't want to, like, yeah, I get it. Like, we always have that urge that, okay, we can make money really quick. But like, if you, especially in Forex, which is such a technical market, could could catching one of these moves, just one of these moves, not make your whole entire year in trading? Like say between 2014 and 2015, you had caught this whole entire move down on euro. Could that one move not make your whole entire year in trading? That's what 3,543 pips. Like you slap one lot on that, that's someone's yearly salary. So if you're not sure about structure, basically what my point is you don't want to enter and lose a trade because you were forcing a trade. So whenever we're in a trade, we want to make sure we know where we are in structure and why we're taking that trade. If I'm unsure, I can play these little snipes based off of support and resistance in between. Like I believe I took this trade right here. I called it out. And I took it basically just because we closed behind below this support area right here. And I was targeting that monthly support. I came shy on my trade about 15 pips or so, but I still count that as a win because I closed my position, I took my profits. I came back up. I could look at another possible short down there, but eventually I am looking to catch that bigger move going up because I know that's going to be the real move that's going to make my year. And this has been going on for about an hour, guys. I don't want to keep you here all night, so we'll pick up from where we left off next week. I appreciate all of you hopping on, and I hope you guys learned anything. Anybody have any questions for me? I'll go ahead and take questions for 10 minutes before we end up ending this call.
What's good?
What's up, man?
Man, I'm at home cold, man. I just got out of school right now.
Oh, nice.
Yeah. Oh, this is recording, right? It's gonna be recorded.
Jamari, will you go over your indicators? So I have this template. I'll actually share it with you guys in the chats. Basically, if I go on my indicators tab, I have a few oscillators I like. I don't trade based off oscillators. I just see if it matches up with my TA. I have an awesome oscillator, bull trading Elliott wave oscillator, CM ultimate RSI multi-time frame, CCI coded OBV. I use all of those for divergences. I have this Dolchin Bollinger hybrid right here. Only thing I do on there is I make sure the plot's background is white and I change all the lines to black. You basically use that the same way you use your normal Bollinger Bands. It's not something you trade off of alone. If you're scalping, it can be of help to you, but I don't like trading based off of it alone. And then as far as moving averages go, I have an 8 EMA, which is an exponential moving average. I have an 18 standard moving average. I usually use those in accordance with trend line breaks. So if I get a trend line break and a moving average crossover, that's a double confluence for me to enter a trade. I use these Vegas waves basically to act as a hard resistance on the 4-hour time frame and the 1-hour time frame. So another way you can use these Vegas waves is if you get a break. I think I was reading up on it the other day. I've been using it for about a year and a half, but typically if you get a break of the Vegas wave, you can expect it to come back and retest that 233. So the Vegas wave tunnel is the 144 and 169. You can expect it to come back, test that 233, and you can enter your position and put your stop right above that Vegas wave tunnel. And you can catch a big move like that. So I think the return on it was that you'll lose 2 or 3 trades before you catch one. But just trading based off this alone, which I don't do, you want to trade with a couple other confluences and knowing where you are in structure. But if you take this strategy, you trade it, you'll win once every 3 to 4 trades. But when you do win that trade, you catch a 200-300 pip move because it's excellent at identifying trend changes. Like if we come down here and we look at it, had you traded it, you would have caught that whole entire move up. You would have probably won these trades, but I wouldn't consider them wins because you didn't catch that. You didn't catch the real move. But on that third break, so you won that trade. I would say this is break even. That's break even. The third move going up, you won it. That's a big 200-300 pip move. and then you won this one. So I think just based off of recent price action on the euro on the 1 hour chart, where one win, 2 loss, 1 win, 1 win. So it's 3 and 2. So the win rate based off of it is pretty good. I like my Vegas waves, especially if you like let's say you caught this trade early, like most of us did. I think I got into this euro short at 1.176. So once we broke that Vegas wave, it was just another confluence for me. So I had that trend line break, my EMA, my SMA cross on, along with my trend line break. When we broke those Vegas waves, I had another confirmation that we were going to continue going down. So it's just something nice to have on your chart because you can expect this tunnel right here to act as a hard support and resistance. So if we go back in time, what you see is on this whole entire uptrend, every time we were touching this Vegas wave tunnel, we were popping up. Even here, we touched it, popped up at first before we eventually broke through. We broke through, we came back and retested that 233, continued down. So I am expecting euro to come back and retest this if we are to continue down or break above it, and that's how we'll know where we are in structure next week. I'm a bit confused on the count currently. Don't know if this C leg is in or not, but I think Monday or Tuesday next week we should be a bit more clear as to like where we are in structure. If you guys know me personally, I don't trade a lot. I like to find 1 or 2 swings. I don't like being in more than 1 trade at a time. So I believe in quality over quantity. When I do trade, my lot sizes are slightly bigger because I'm pretty confident in my trades. I don't take a trade unless I'm confident in it. But yeah, that's where I stand. Jose, will you be sending signals or only educating? I don't send signals per se, but I do send my charts. I'll like to tell you guys what I'm seeing.
Where is it?
I appreciate
And the Vegas waves is the ones that are like Bollinger Bands, right?
Might be a stupid question. The evening star going over 50%. Can we also use, yeah, you can use the fib. So what you'll do is like, let's say, for example, like I know it's not, but, oh, right here. So this is a morning, this could possibly be a morning star had we gotten a bigger candle close right here. But let's say you were looking at this as a morning star reversal. What you would want to see is on this retrace, okay, did this candle close at least that 50% level, which it did, so that would qualify. But obviously this is at the end of an uptrend and not a downtrend, so this, you shouldn't even be looking for this pattern right now over here. But just to show you guys what we do look for is like, let's say that was at the bottom of a downtrend, like you had seen something like that over here. If this candle closed at least 50% of this candle, it would qualify as a morning star. And then the exact opposite for an evening star, like let's say, see if we can find one. Okay, right here. You get this doji, and you would want to see, okay, well, did this next bearish candle close at least 50% of this bullish one? You take your fib. As long as you hit that 50% area, you're golden.
Suneel, I had a quick question for you, my man. Did you say that you're waiting for Euro USD to bottom out, to reach like an absolute low?
The reason why I say that is I know that this next trade could possibly make my year.
And you're talking about when it reaches the absolute low, right? Like,
so if I go on a 3-day chart like this, I have a very clear count because I know the market trends in 5s, corrects in 3s. So what I'm confused about is I'll never know, like I'll never be able to call the absolute bottom on this C leg down. But once I do see that impulse wave up, I'll understand that, okay, it's time to go long. I'll catch that retrace and I'll be in that buy for probably 6 months to a year.
Okay, thank you. That's crazy. Hell yeah. That's exciting though too.
Yeah, so if you can catch a trend, like you just got to think about it like this: like between 2017 and February of this year, could this one trade have not made your entire year? You just got to think about it like that. This alone is a 2,235 pip move. A standard lot on a trade like this is $22,000. And your risk would have been low as well. I think on a trade like this, I would have had a risk limit of maybe 100 pips, which is what I'll be looking for on the euro as well. So basically what I'll be looking for on euro is I want to see this first impulse up, like that strong first wave up. And I'll be looking to buy this retrace. I'll be looking to buy this retrace right here, and I'll have an easy stop right below this level. If I'm right, I catch a lot of pips. If I'm wrong, I only lose this much.
Yo, I got a question for you, Suneel.
Yeah, bro.
How you doing, bro? You good?
Yeah, man, doing well. How about
You
yourself?
look good. You look good. You look real good. Hey, so on Euro USD, all the way at the bottom, isn't there a gap? Isn't all gaps supposed to be filled in the market?
Not necessarily, man. So
No?
you got to realize that this is all still an internal move to this. Because like if you scroll out, like, okay, let's go ahead and remove everything on this chart. Remove all our drawing tools, remove all our indicators. Just look at price. I don't know what happened before this over here because price wasn't recorded on TradingView. But in terms of what I do know is that I had an impulsive move down. Just to show you guys how technical of a market Forex is. Where do we retrace to? That first move, 61.8. Okay, now I see. So this all looks like a corrective structure still to what we had going on prior to this. I don't know where price was before this. It might have been lower, it might have been higher. But based on what I can see, if I am to take all these retracement targets, like let's say this was our absolute bottom. As far back as price goes, where did we support? 78.6. So it just goes to show you like none of these numbers on this chart are by coincidence. Like everywhere we find support or resistance, like if you go back in time, you go on a higher time frame, you pull your fibs, you'll almost, honestly, man, like 100% of the time, you'll see that we ended up somewhere in a supportive area, like at a fib region. Just based of how technical this market is. Like even if we take this most recent just push down, this is on a 3-day chart. We're looking at a lot of pips. That's what over almost 4,000 pips, like 3,700 pips. But if you pull your fibs, you'll see it ends up like right out of fib region. To the T, 61.8, push down. If you look at this right shoulder right here, we saw that it was at the 50. So it's like, you just need to realize that none of these things ever happen by coincidence because the majority of trading done in the markets right now is done by algorithms. Like these banks, like if you think about the banks, they're not sitting on their computers all night long or on their phone trading the way we do. Like that's literally only the retail trader, and the retail trader doesn't really affect the market like that. So in terms of what's going on right now, I do think we have an impulsive move up. As far as whether we've met our first algo target at that 50%. So it's possible that we continue we might find support here again and push up. And it's funny that this area actually lines up with my monthly support if I draw it on the monthly. So it's a bit conflicting right now. We might have another push down to 61.8, but if we do get down there, like even if it's short-lived, I can expect a spike in the market, at least for a couple hundred pips. Worst case scenario, I see us going down to 108, but wherever we do end up going to, when I get that initial impulse up, I will be looking at buying that retrace for a long-term buy, because I don't think it gets any cleaner than this in terms of having a 5-wave structure. Also, if you guys aren't familiar with Elliott wave, there's only one proven instance in the history of all markets where it didn't work. So if you learn how to count structure and you actually like figure it all out, it ends up like helping you out a lot. Because as far back as you go, like you'll see like we trend in 5s, we correct in 3s. Like right here, 5 move up, 1, 2, 3, 4, 5. You scroll in. I promise you, you'll find a 3-wave correction down. Yeah, 1, 2, 3 down, 5 more up. If you look in here, 1, 2, 3, 4, 5 up here. You zoom in on that. Right there, 1, 2, 3 down, another 5 up. 1, 2, 3, 4, 5, 3 waves down. 1, 2, 3, and then we ended up changing trend right here. So it's like if you actually like go in and count all this, like you'll understand like whether we're corrective or bullish in nature. So even this most recent wave down on euro, we have this. All right, we have 1, 2, 3, 4, 5 going down. What do you see going up? 1, 2, 3. Trend in 5s, correct in 3s. So if you're like questioning, are we bullish or bearish? That's usually something you can go on. Like you don't even need to count Elliott wave for that. You just want to see, okay, where are my bigger moves? If I can count 5 waves going up, we're bullish. If I can count 5 waves going down, we're bearish. And after that initial move, I can expect a 3-wave correction going up. Yeah, if you guys were on the Silent Billy lesson the other day, I actually gave away that website.
Hey, bro, you a beast, man. You a beast. All 46 people stayed on this call the entire time, bro. You are a freaking beast, suneel. These guys don't know how much nuggets you just dropped to them. They're not ready. They're just getting started.
Appreciate that. What's my fib setting? So I'll go over fibs and how I use them next week. Just wanted to break down market structure a little bit for you guys this week. This is what I have on my retracement. And then as far as my extensions go, it's a little bit different, slightly different. Those are my extension targets.
Appreciate you, big dog.
No problem, man. And those are the extensions, and these are my retracement targets. Also, one that I use that a lot of people don't use is this 0.65. Because what I've noticed is that a lot of you guys do, when you're trading the 61.8, typically what I see is that everyone has their stop below the 78.6. Like if you're wrong at the 61.8, you know it's going to hit that 78.6 area. This is what we call the golden pocket area. Right here. So if you're looking to trade, especially on a higher time frame where you have like in your swing trading, you don't want to have a stop that's like 200 pips. So if you're expecting that 61.8 to hold, you can have your stop right below that 65. If it doesn't hit, cool. If you get stopped out, cool. You buy at the 78.6 and you can have your stop below the 78.6. I don't necessarily see the point in buying at the 61.8 and just having your stop all the way down here. I find that a bit ridiculous, honestly. Can you show that again, please? Which one? Tuck, Philocone crypto trader used that 0.652. I actually know Phil personally. I know him and Eric. That's cool that you know about them. Were you looking at the extension or the retracement for fibs? I'll just show you both. Doesn't really matter. So that's my retracements. I'll leave that up there for 30 seconds. Yeah, Tuck, as far as Eric's group goes, I actually used to work with Eric. I used to send trade setups in his group as well, in his private Slack group. Do you need the extensions too, Todd, or are you good with just the retracements? Extensions too. All right, let's pull them up. I don't want to keep you guys all night because I can ramble on. So we'll go over extensions and we'll go over some market geometry next week.
Yeah, you can ramble on, man. Ramble on.
No, man, I actually have to get some stuff done as well. So next
My
lesson.
man, time is valuable around here, man. What you doing, Anthony? He gotta go.
Man, I'm trying to get every piece of knowledge I can, bro. For real.
Listen, man, when you're talking to one of the right guys, because Suneel right there, he's a GOAT. But yo, Suneel, I appreciate you for giving all of us your time, bro. I actually learned a lot myself today on this call. And I'm gonna start putting a lot of it to work. I'm gonna start practicing with it. I really like this form of trading. It's a lot more secure than a lot of the ways I trade. Because I'm an in and out dude, you know what I'm saying? I scout.
Yeah, I feel
But
that.
this definitely I'm gonna put to use for the rest of this year.
Yeah, it's a
And
lot more relaxing, man. Like you're not
yeah, I bet it is,
all the time.
I bet a whole gang full of goats.
Say he
You
was
already
gonna
know,
share. He said he was gonna share something. I don't know what it was. What
Hey,
is it he was gonna share? It was a indicator or something like that, a template.
Yeah, I'll end up sharing this template I have with you guys. It's basically just some of the things I like to use. The only thing you'll have to go in and add is that 8 EMA and that 18 EMA. And then on this Dolce&Bollinger hybrid, all you'll have to do is double click, make the plots background white, and just change all these to black. So it's a little bit easier on the eyes to see.
every time Suneel talks, I hear because that's what goats sound like. You know what I'm saying? Hey, bro, much love to you, Suneel. I'm about to get off this call too, bro. I appreciate you giving me a lot of your time, bro. I really enjoyed this class, one of the best ones that I've been on. So, you know what I'm saying? Hit me up, man. Let's get to work. I love everybody on here. All you people are fucking beautiful. I love you.
Whoever has any questions, you guys feel free to reach out to me personally. I love talking trading. It's pretty much all I do. So just feel free to reach out. Will you share signals? I'll share my charts and the trades I'm taking, I guess. I don't mind. All right, guys, I'm gonna go ahead and hop off too and end this call.
Thank you, Suneel. Appreciate it, my man. Look forward to you coming down here one day to AZ.
Yeah,
For sure,
thank
man.
you, bro.
Actually, you might be coming up next week. We're gonna figure all that out. Me and
Oh,
Rashad.
yeah, my man. Super stoked to meet you. Much love. Take care.
Yo, Sunil,
Yeah.
are you gonna be in Orlando on the weekend?
Probably not this weekend. Maybe the weekend after. I'll let you know. I am planning an Orlando trip though. We have a lot of traders out there.
All right, cool, bro.
Sure.
Neil.
Good.
Hey.
Oh, what's up, Michael? What's up?
What up? What up? Definitely appreciate you, bro. Dropping them gems.
Yeah.
For sure, guys. For sure. It's just a start. Just some basic stuff so you guys get familiar with my trading style today. Yeah, no problem, guys. Appreciate all the love, guys. I'm gonna go ahead and hop off.
Bye. Bye. Adios, bro.
Thank you.